Okay, what's up, ladies and gents? Aneli here, Amplified Trading. Today, I'm just here to talk about um, something very simple concept, and it's as the way that I usually do my sessions and how I apply what I know about the market. And this is a very simple way of looking at markets, all right? I know some of you guys might have come across this, but didn't really apply it to your trading day to day. All right, so this is just an introduction as to what this entire concept is about. Okay, more on that at the next coming video. But for now, we're just going to be focusing on why you should basically take this and sort of like initiate it or install it in your trading strategy or trading plan or whatever the case may be. Okay, now the market, as we all know, has a sort of like two steps forward, one step backward, sort of like movement right. Now, the best part about this entire thing is that this can go on for quite a long time. Right. Now, a lot of people will immediately try to, once the market starts doing this, right, because you've got to the end of your screen, right? If you're looking at this on the H1, on the 1 hour time frame, the only thing that you can see is that there's so much space around this area that needs to be filled that the market is most likely going to be going up for the next couple of days, a couple of weeks, right? Now, if you sort of like pull back, right, you might also still see same premise. You're like, all right, there's a nice support level at 1558, and based off of that, you'd like the market to come back high because with logic, you try to apply logic to the market, but obviously the markets are not a logical place because if something is cheap, it can get cheaper, right? If something is expensive, it can get even more expensive. So there is no floor and there is no ceiling. Right. So let me repeat that. There is no floor, there is no ceiling, meaning there is no actual structure that says, all right, this is where the market is going to turn. A lot of people try to pick where the top or the bottom is going to be. It looks fine when you actually get it right, when you get to brag on Facebook about getting it right. But when you don't, it can be a tough cookie because it's going to happen. A lot of the time, that you're not going to get it right. So if you're looking at this now from this perspective, right, now the space is then obviously no longer on the upside, it's actually on the downside. So now, if your buy level was somewhere around here, based off this trend reversing, because this is a daily trend, based off this daily trend reversing, the markets could still pull back down. Right? There is no clear indication that the market trend has actually changed, and therefore, right, I will say, based off my experience, most of the time when you're trying to trade a reversal, it's as good as guessing, right? Now, your chances of getting it right increase once you have any sort of clear confirmation that the trend is about to change, right? This is not a clear confirmation that the trend is about to change. Even this candle here is still bigger than this one that's actually coming up, right? Now, should the market come back up and start closing and breaking higher highs on the relevant smaller time frames, then we could have a trend reversal. Okay. Only then is it safe for you to say, all right, now I'm looking to buy the euro dollar at this point based off my experience and the way I trade. Now, obviously, this is just something that I've noticed a lot of people do and fall victim to. Right? They try to pick where the high is going to be and pick where the low is going to be. Right? So if you try to do this, let's say for the past for about 3 or 4 months, right, and the market just kept rising, as opposed to you waiting for this break, for example, and then catching the majority of this move going down, you're still in this trade because the market hasn't changed direction. You got a good 600 pips, right? So what if you miss 400 pips? You still banked 600 pips, and this is not within a year or anything like that. This is relatively um, short. This is like 3 months, if I'm not mistaken, of the market just declining, declining, declining day in and day out. Right. So that's the simplest way for you to look at the market. Now, there are obvious ways that you, or things rather, that you can incorporate to make things much more simpler, right, and much more accurate. But for now, the whole idea or the whole message that I have is, right, quit trying to pick where the high or where the low is going to be. Right, trading is not about entries; it's about making money. Right. If you depend so much on entries and how good of an entry you have, that's mainly because there's something in your mind that tells you that entries are more important than actually making money. For me, I have reckless entries. They're not reckless, but they're not that good, you know. They're not like pin bar entries. See a lot of guys having pin bar entries right at the thing, you know. But if you ask them to send, let's say, a 3 month statement or verified MyFX book account, obviously you can't get that because it's one day that you get the spike, right? And all the other days nothing really happens. So you get a screenshot of that one sort of thing. What you want to do is achieve consistency, do it in a very simple way, and just focus on doing whatever your methodology is, your trading strategy, as well as your trading plan tell you to do, and a bit of consistency and also commitment, obviously, definitely going to make things happen for you. All right, so you guys can go out and check out the blog, right? A new blog out. You can go on through to the website, details in the description, www.amplifytrading.co.za, and you can claim your free ebook there as well if you wish to. Right, me signing out. Cheers.